we have some information to share with you guys in regards to specifically Quant. Here it is right now, and that is just this. Look at this. It says it's just a winning game now, right? Look at this. So this was originally featured on newsbtc.com, which is kind of ironic, right? With all the Quant, Bitcoin maxis against Quant, but some are fans of it. Look at this. What to expect from Quant in 2023? Well, that's a good, statement. Some people have asked me this, right? Some of you guys have asked me this, especially some in the recorded comments section. So it says, what to expect from Quant in 2023? Quant is believed to be by many one of the most promising coins for 2023. Although the token's price has dropped by 40% over the previous year, Sadiment tweeted a report stating that Quant's total supply in exchanges has decreased by 23.4% within the same time period. And we did report this to you guys yesterday. Now, it states this indicates the coin experienced an increase in demand in 2022 and could be set for a massive price rally as the crypto market recovers in the coming months. How do we know this? Well, in yesterday's coverage, we specifically gave you information in regards to what whale activity. And if anything, you saw 187 transactions of, 100,000 or more for Quant. So again, some more indicators to say the least. Pretty cool stuff. On top of that, here's the thing, and I do agree with this particular statement, and that is supply shock, right? Waiting for that supply shock. Quant is becoming more and more scarce. What does LSE PLC, which happens to be the London Stock Exchange, Quant Network, again, a little bit mixed into Quant. So I guess you could throw in Alliance Block with Quant coverage. So it says, what does the London Stock Exchange, Quant, and Alliance Block have in common? Listen to what our co-founder and CEO said about it in a recent video with, listen to this, Tokenizer, the guy that I did that deep dive with, right? Remember that? So I thought that was really cool. And it's nice to, put a picture to the face. We're going to play some of this. I'm going to share it in a way for you could hear it actually in just a moment, and then we'll come right back to it. And again, thank you to everybody who's here tonight. I'm going to go ahead and show this right now. And this one's only 1 minute and 33. There is a full interview if you're more interested about this. And of course, here's the link, but we're going to play this. And here we go. Tokenizer, who is a really detailed blockchain researcher. He does really, really good threads. And he's interviewing Rashid Ajaha, who is the ALBT CEO and co-founder. Here we go.
We know you guys have a partnership with the London Stock Exchange that's actually leveraging Quant's Overledger. I'm really curious on kind of the progress of that and how that's been going about over, let's say, maybe the past year or so.
Yeah, absolutely. So London Stock Exchange, we have spoken with them lots, and now that we are basically really in the last phases of releasing the product that we really working on, this is where we will start the communication with them to start actually leveraging our technology. So we will come back to them. So this is why I'm really excited about the next 2-3 weeks. And actually, we are seeing a lot of interest into this identity solution. Now, Quant Network, so I have been one of the first, I would say, the second on the Telegram. So I respect a lot Gilbert and all the teams. They have been doing absolute amazing job. So we have built actually our bridge, not, I would say, it doesn't confront what Overledger has been doing, because Overledger is really for enterprise. This is very important, okay? So for us, once we start getting to the enterprise layer, I think it's very, very important to be able to leverage Overledger because their tech is secure, it's very important. Gilbert speak on all Inatba, and actually we are now part of Inatba, so I have been seeing some of the speech, and I really respect Gilbert, as I said. So for us, I think once we start the institutional offering, Overledger is a no-brainer to be able to use, and I advise everyone that want to attract institutional, they must use Overledger.
All right, really glad to share that. So if anything, you have a CEO straight from ALBT literally stating that, he recognizes how institutional money should utilize just that. What? Quant's Overledger, their specific operating system. And if you have other organizations or other blockchains in this, instance stating that, can you imagine how many more will be stating that further down the road, especially going into this particular year, 2023, and so on? That makes it, Quant be something that you should be proud or more bullish on, to say the least, because again, talking about the utility, if you have the likes of ALBT CEO and others basically vouching for it and are impressed by it and so on, that's really, really impressive. All right, so I'm gonna go ahead and get one more out for you guys before I kick it back into the comments. Thank you to everybody who is here tonight, and it is a little bit more in regards to Quant. Let me see real quick. All right, here we go. I saw this earlier and I thought we'd share it with you guys. So here it is, specifically 2023. We were just talking about this, right? You just heard, for instance, from the CEO of ALBT. It states blockchain use cases abounded in 2022, but we've only scratched the surface of what the technology can help achieve. How true. What's coming in 2023 for the interplay between distributed ledger technology and the financial sector or services sector? Well, Gilbert Verdian of Quant makes key predictions for the year ahead, and I decided to get more into this. When doing so, it pulls up this particular piece, and this was basically published yesterday, so it's pretty, hot off the press for the most part. So check this out, and if anything, like it says right here, there will be an agreement that the unregulated crypto experiment has failed, referring to a lot of things that you see, for instance, in DeFi and so on. Look at what he states on the right side. Only about 1% of developers have the specialist knowledge required to work with digital ledger technologies. Pretty bold statement, right? It says, with the collapse of FTX, the crypto winter, and the breaking of UST, 2022 has been a challenging year for crypto, as we know. But what is the key thing here? The key thing should be where it states, the collapse that followed served as a potent reminder of why we have financial regulation in place to protect the people. And here at Crypto Talk Now, we mentioned it a few times before, and that is basically this. Once we get regulation clarity, I think you start seeing a lot of things starting to take off. Whether you're a fan of regulation or not, there does need to be some things that have just that, the clarity. We need to have things strictly defined in a way in order to move forward in the right direction. Now, in regards to some of these, stringent rules, to say the least, especially with what's coming up here soon, probably by, March, when, Congress comes back and basically, get some real legislation. I mean, let's face it, by the end of this month, they should be back, but they get the ball rolling, usually, typically speaking, in March. Governments and regulators will realize they can no longer expose consumers to unsupervised exchanges who seemingly had a license to print money and generate steep losses for those who could least afford it. That's why I'll always pound this home so many, many times. And that is, for instance, it's not that Bitcoin was made originally to be a hedge against inflation. It's supposed to be a hedge against money printing. Furthermore, the size of cryptocurrency market has grown significantly. It is now has the ability to act as a contagion to the rest of the financial system, triggering concerns from regulators who need to act and mitigate risk with appropriate rules. And we're going to see more and more of these appropriate rules being handed out. Like I mentioned, it's just a matter of time. I'm thinking literally March, and I'm going to stick with that. Recognizing the need for regulation is one thing, designing, agreeing to, and implementing is quite another. Yes, we will get from the stage where it's not going to be like what we saw, for instance, late November and in December and so on. We're just talking about some of this. It needs to be implemented. And if anything, we're going to again see that happen here soon. On top of that, additionally, as the crypto world becomes more staid and sensible, layer 2 technologies that were hastily and poorly designed will start to disappear. Here's where you get some of the particular statements of people saying, 99% of all crypto will go away. And some people think, well, how can that be the case if you have 22,000 cryptos listed on CMC and so on? It's kind of like what you see right here. The reason why someone will disappear is because some of those specific, right, layer 2s, and so on, they just haven't worked out. Now, don't get me wrong. There's some layer 1s that work out well. I think, for instance, Polkadot's layer 0 and other ones like that stick around. But there's going to be that case where a lot of these do, in fact, go away. And it's the ones that stick are the standout ones. Again, the innovators, how they come out from this. That's the ones we should be paying more attention to, because those specific ones have the utility. They last a test of time. All right. So it says the more useful and usable networks will be left intact. Literally what I just said, stronger than ever. The hype will die down, and crypto enthusiasts will, turn their attention to other use cases for blockchain. Or how about this? When it comes to understanding Quant's overledger, that particular operating system that allows 100 plus blockchains to be interoperable, blockchain agnostic, right? So I'm gonna go further down. I like this example. It says, for example, in cases where startup funding is limited to small pool of sophisticated LPs, tokenization and the right regulatory framework could enable smaller investors, new specifically, right, promising opportunities. And I couldn't agree more. Moreover, the loss of confidence in unregulated market participants has triggered a flight to safety. Investors want to pursue the returns with experienced, regulated institutions that offer access to crypto assets whilst protecting their users and capital with proper oversight. Like it also shows right here, banks and asset managers will scramble to recruit blockchain specialists. Think about that in itself. This is why we put a lot of emphasis on Quant, right? Who's a blockchain specialist? It is definitely Gilbert Verdi and Quant. Now, for all the naysayers to say, well, if he's such a blockchain specialist, then why isn't Quant a blockchain? That is beyond the point. Here's the thing. It's that Overledger allows, again, I know we say it so many times, but that interoperability. If you're allowing a specific operating system to do just that, where, they can benefit even that much more, or how about this, be more cost efficient, do away with waste, then that becomes significant, because you provide something that a lot of the other ones out there simply don't have. That type of thing, that type of, let's face it, something that is above everything, right? Like beyond, how should I say this? A layer that didn't exist over everything else. I guess maybe that's why they do call it Overledger. Think about it. All right. I'm going to go further down into this. And, there's the whole thing with JP Morgan and all that. But I like this last part. Well, it's not really the last part, but it says, rather than paying for service level agreements, data centers, cloud hosting, and other services, listen to this, financial institutions can and will leverage blockchain infrastructure at a fraction of the cost running the same transactions in-house. Gilbert Verdi has literally mentioned this many, many times, where he had, for instance, a different blockchain project come to him and so on, saying, this is costing us, for instance, $10,000 a week and whatnot, and he gets those expenses cut down. How is this done? Through the likes of Overledger. And if anything, we've covered this many times. On top of that, it says, efficiencies aside, tokenization could improve several areas with asset management. Here's a perfect example of that. Liechtenstein's exchange, LCX, right? They are literally recognizing the power of tokenization. Tokenized private equity products may come to market. I think it will. I think that's another thing we should pay close attention to. And that's going to allow capital to be raised via tokenization as IPOs and SPACs decelerate, right? And again, LCX takes perfect advantage of doing just that. With the combination, like it shows right here, of 19 of the G20 nations who are now piloting CBDC projects, which means governments will rightly need to address public concerns around individual privacy as part of a broader education around the potential benefits of CBDCs. You will see more in that supply and demand for the likes of Quant. Combine that with more scarcity happening on the daily, I think Quant is really, really making themselves stand out, especially when it comes to 2023. In closing, before we wrap up this particular coverage from this specific mention from Quant's Gilbert Verdi, he states 2023 will see further focus on building CBDC infrastructure, and that should be the main key takeaway for you. Yes, we talk about CBDCs quite a lot, whether you're for them or not. But understand, when it comes to a utility run, if you see a lot of demand of various different companies will seek focus on building just that, the CBDC infrastructure, right? Like it says, that values consumer protection, privacy, and interoperability. Combine that with regulatory clarity happening here soon, probably within the next few months. There's going to be that much more want and need for the likes of Quant. If you want to read more about this, the whole thing, you could check it out straight from the Quant site. Simply look for this specific article, DLT in 2023, Out of the Blocks, by Quant's very own CEO, Gilbert Verdian. So it says, it doesn't matter how much you have or even if you don't have any. Well, what do you mean if you don't have any? You got to have some, not financial advice, but it says, but you must understand that Overledger is going to be one of the most integral hybrid solutions to interoperability of the digital assets in the future. Institutional DeFi, centralized or CE DeFi, public and permissioned, right? Look at this. So it says, this specific example from the institutional DeFi design, Exhibit 5. The 3 key design choices of blockchain. Listen to this, right? This is kind of our educational side of things, right? So you have blockchain refers to the type of network used along with the level of data security and privacy, right? On the left, you have, for instance, public permissionless. In the middle, you have, for instance, network type versus public permissioned. Key thing here. So, in this corner, the undefeated, undisputed heavyweight champion of the world, public permission versus public permissionless for the blockchain bout of the world. Transparent versus data security and visibility. Spectrum of choice versus private. Public permission networks, on the other hand, can facilitate the user controls to authorize user access and restrict the visibility of transactions on these networks. This enables easier implementation of checks and balances, along with traceability for investigation purposes. As institutional DeFi models are still being explored, it is possible a public permissionless blockchain could be modified to ensure it is unstable or usable at scale by institutional participants. It states Exhibit 9, Project Guardian pilot setup. And we have briefly talked about Project Guardian, right? But here's something I want to point out, right? Open interoperable networks, they avoid fragmented and private exchanges or markets. Now, in regards to that specific pilot, public blockchain, you can deploy solution on public blockchain for transactional activities. Of course, you have the trust anchors. You're going to be able to verify credentials, digital issue to digital identities. Man, some of this stuff is tongue twisters, right? To trade only with verified counterparties. But how about this asset tokenization? We're talking about this a lot, and especially when it comes to the likes of LCX, right? So you can ensure operational feasibility of asset tokens. In regards to that pilot, tokenized deposits and bonds, issue and transfer tokenized assets using a public blockchain. You get a little bit more in regards to this, right? But here's the thing, right? In regards to a public blockchain, here's an example. Polygon was selected for its potential to allow higher interoperability of tokenized real-world assets and DeFi products, which allow participants to develop their own solutions based on a set of agreed-upon technical standards. The pilot leveraged tokenized assets created by the co-authors across 2 work streams. In work stream 1, Onyx by JP Morgan, focused on tokenizing Singapore dollar SGD deposits, and SPI digital asset holdings focused on tokenized Japanese yen JPY assets in workstream 2. And then here's the thing I want to mention real quick. So you see, for instance, they have tokenized assets with Japan. We know that there's a lot of regulatory framework that is being introduced to Japan. I think when we get more regulatory clarity, be on the lookout for the likes of, for instance, Jasmy to be something that really will stand out. In the future, we're going to do a deep dive into Jasmy. I personally hold Jasmy and so on, but at these particular price levels for Jasmy, I'm extremely bullish on Jasmy. I feel as though it's one that everybody should hold. It's not financial advice. That's just my own personal opinion. Because of the way I look at it is that risk to reward ratio, why wouldn't I want to take a chance on that? And I did. I got over 100,000. I am looking to DCA more into Jasmy. I know this turned into a Jasmy thing, but I want to point out some of those things. On top of that, listen to this in regards to Quant interoperability. It says open interoperable networks So for instance, explore the use of public blockchains to build open interoperable networks that enable digital assets to be traded across platforms and liquidity pools. This includes interoperability with existing financial infrastructure. When people ask about Quant, this is I guess you could say the third thing I should have mentioned about the utility to the person that asked me this earlier. This is one of the key things, because if you're able to include interoperability with existing financial infrastructure, then from there, you're able to use legacy systems. And if anything, that pounds it home that much more for understanding the utility that you bring at scale that nobody else is technically doing. This is why I mentioned that Quant, in my humble opinion, is a monopoly, because there's nothing else out there yet that competes with this. Okay, so it says open interoperable networks can mitigate against the formation of walled gardens and digital exchanges and fragmented private markets. So an example of just that, just double checking my settings. You know, I always use the gaming reference, right? So the longest time, you know, when I'm playing a game, right? So, you know, this specific game, it's on the Steam network, right? And somebody from, you know, for instance, Origin wants to play with me. How it used to be a long time ago is they couldn't do that. Or how about this? You talk about Call of Duty, right? Somebody plays it used to be this way, right? So if you played on, like, you know, an Xbox, a guy on PlayStation could play with you. But what has happened recently, you have technically interoperability with those specific platforms. You're able to have a guy who's on PC, he could play with guys on Xbox and PlayStation. I know that's a different example. It makes perfect sense. And if it makes perfect sense with the gaming world, right? Because you're allowing people from all platforms play interoperably with each other, right? It makes that much more sense for the financial, you know, structure of the world and so on. And this is why Overledger is so darn significant. Now, getting a little bit more into this before we kick into the next part of coverage. Exhibit 3, noble benefits of DeFi. Now, we know quite a bit of DeFi, right? We know a lot of the benefits and so on, but how, you know, what's the quant connection, right? So it says interoperability across asset classes and markets aggregates liquidity, enables more globally integrated finance industry. Think about that. Enables more globally integrated finance industry. There's a lot of demand to have those integrated, not just through the likes of Quant. Obviously, let's face it, XRP, XLM. What are you seeing? You're literally seeing Swift being upgraded specifically to what? Some of these things that utilize some of these technologies, blockchain technology. All right. So I thought this guy did a good job. Lord Quantonian. All right. And like he mentions, it doesn't matter how much you have, or even if you don't have any, but you must understand that Overledger is going to be one of the most integral hybrid solutions to interoperability of digital assets in the future. All right. In closing, there's one more I want to mention, and that is this. I did forget to mention this. It says innovative DeFi solutions amplify liquidity of tokens and tokenize real world assets, given lower participation thresholds such as decentralized exchanges. And that's significant, because if anything, we will see more of that demand kick in. And of course, I just wanted to wrap that up with specifically that.